Results of the comeback in South Africa's embattled economy during the third quarter will be laid bare tomorrow. Stats SA will release GDP figures for quarter three, which will outline the technical bounce back, hopefully, from the second quarter's record decline of 51% measured on a quarter-on-quarter and seasonally adjusted basis. I want to bring into the conversation our chief economist at Econometrix, Dr. Azar Jammine, who will no doubt be looking at those numbers very, very closely. Azar, what are you expecting tomorrow? There is talk of a rebound by as much as 50%. I think that came from the central bank itself.
Yes, I think that's very much the order of the day. There are some economists who are even more optimistic than that and saying it could be more like 60 or 65%. But it's very difficult when you're dealing with such huge changes from one quarter to the next to be absolutely precise about what you're going to forecast. But it certainly is going to be of that order of magnitude. But I should warn viewers that not to get overly excited by that. It's simply coming off an incredibly low base, and what is going to be a much more reasonable comparison is really comparing third quarter 2020 with third quarter 2019, and in that regard we're looking at some decline of the order of 6 to 8% year on year, which is really the extent to which the COVID-19 lockdowns have cost us in terms of economic growth.
Would the ease or would the rebound, Azar Jammine, be driven directly by the easing of the lockdown restrictions, or is there more to it than that?
There is more to it than that, but without a doubt what we have identified is that with each lifting of lockdown restrictions there has been a marginal improvement in various economic indicators, whether you're looking at manufacturing or mining production or retail sales or car sales. Every time there's a bit of a lifting of restrictions, you get a bit of a uplift in your statistics. Today we got, for example, release of accommodation statistics for the month of October. They're still absolutely wretched. 22% occupancy rate, but it's up on the 15% occupancy rate that prevailed in September because of the lifting of lockdown restrictions. But there are other factors, including the dramatic 30% decline in the amount of interest that consumers and businesses are paying on any loans that they've got this year, as well as the after effects and the benefits of the relief packages announced by the government, such as the temporary employee relief scheme through the UIF for those who've lost their jobs or have had job cuts, and as well as the introduction of a special social grant for those who don't qualify for the conventional social grants but are unemployed. All those factors have probably kicked in. Oh, there's also the interest payment holiday that banks introduced for many people who were stuck and unable to pay the interest on their bonds.
Azar Jammine, there was a vaguish statement from the Monetary Policy Committee that said, and I quote, "Getting back to pre-pandemic output levels will take time." I could ask you how much time, and you'd probably say how long is a piece of string?
Well, yes, there is a more precise answer. Next year we are expecting a significant improvement, a further improvement in economic growth. But remember, we will have come down by 7 or 8% this year, and even if we go up by 3 or 4% next year, we'll still be down some 3 to 4% on where we were pre-COVID. So we're really looking at 2022, 2023. Now, if you go back to a suboptimal 1% growth rate in 2022 and 2023 due to all the structural impediments of the economy that resulted in its abysmal performance over the past decade, it may take until 2024 to get back to where we were pre-COVID. On the other hand, if we go ahead with some of the structural reforms that the government has itself been mooting, but that around which there is so much skepticism regarding its implementation, but if it does get implemented, we could get to pre-COVID levels even by 2022 if we then see that 3 to 4% growth next year being followed up by a similar 3 to 4% growth in 2022. But there is a lot of skepticism as to whether the government, given the factional divides within it, will actually be allowed to extract and exploit the opportunity available to really improve our sustainable growth rate.
Well, we should know those GDP figures this time tomorrow. Chief Economist at Econometrix, Dr. Azar Jammine, thank you very much indeed.